Deep Dive with David Stendhal, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey, it's David Stendhal with tonight's Deep Dive. It is February 15th, 2018, and I thought I'd take a look at the Australian dollar with the ETF being FXA. We have the short trend to the downside, intermediate and longer term to the upside. Got kind of a mixed bag here. The technical rating is positive. The accuracy is there. It's strong, but you'll see that for the most part, it's really not going to kick in until the end of the month. But we did have a wave low that triggered. The other thing I'll point out, and this is what I'm going to spend a little bit of time on, is that we had a pulse low that occurred today, and we had a flow low that occurred a couple of days ago. And it's the flow low that I want to really address because this is more of a profit taking, and I just want you to be aware as to how to use this particular indicator when it does pop up. So first thing is this, since I'm working on a presentation for the Value Charts Pro Alerts, I just want to point out that what we have are profit taking, we've got reversal and continuation, and environmental change indicators. So there's three separate categories that we always talk about, and when it comes to the profit taking, that's where the flow low comes from. So I'm just going to pop back here and just make sure you understand that the header here, profit taking, flow low, we got reversal, and we got environmental. So those are the three major things that we're going to look at. But the only one that I'm going to be addressing this evening is the Australian dollar, and we're going to be looking at the flow low that occurred a couple of days ago. So here it is. You can see that it's a little cross here, right here. And when that triggers, what we would do is we put it on the day that it actually triggers, but then we're not really going to be able to react to it because it's a daily bar indicator. We're not going to be able to react to it until the next day. And so whenever you see these things, depending upon when I update the information during the course of the day, you'll see that it may pop up, but it's really not official until the end of the day, and then you use it on the open of the next day. So you can see that this is a profit taking. So as the market sold off, that was suggesting that you should take profits on the short side. Now, some people will look at this as a reversal type indicator, and I'm going to address that. That you could say that, hey, this is a really good entry point, but we have other tools, other alerts that will really address those types of issues. These are best used as an exit routine for a short position if it was obviously a low, and if obviously we had a high, then we would be liquidating the position and taking advantage of the profits made on the long side, and not necessarily going to short, but liquidating the long position. So what I thought I would do, since I've got this and I'm putting together the presentation materials, I've enlarged the flow low indicator itself a little bit, and this again for Australian dollar just has more information to it. And you'll see that if we get two triggers in a row, we'll take the first one, not the second one. And this is one of the cool things that I helped to create a long time ago. It's the performance report that comes with inside of TradeStation. Before it was very limited as far as the information that you'd get. And someday I'll do a whole workshop on what all these numbers represent. But just to point out that again, this is not necessarily, I'm just going to make this very clear, this is not us going long the market, this is us taking profits. What I'm showing are some quick little stats as to what happened after it triggered, and why it is that you want to take advantage of the flow low when you actually see it. So it's not necessarily addressing what happened on the downside, it's saying if you didn't adhere to the indicator and you held on to the position for whatever reason, what kind of performance are you giving up? And so long story short, you can see that we got a profit factor of 2.37. We have a couple other quick little numbers here. We've got accuracy of 65% and a ratio of average wins to average loss, AWOL as I call it, 1.28. So I won't go through all the different numbers. These are going to be some of the things that I'll be talking about in varying workshops into the future. Point is that when you do see these flow lows, that you do want to take advantage of that profit-taking indicator as it is categorized as, and really take advantage of that when you do see it. And that's not saying to liquidate the entire position. It's simply telling you that you should be liquidating a portion of the position, assuming you're not a one-trick pony and just simply trading a single contract. The other thing that I'll point out, since we're looking at that particular deal where the market's going, well, obviously it's been heading a little bit higher. Let's take a look at the seasonal tendencies to the market, Australian dollar, and just give you an idea as to the way that we're sort of playing this out. We're perfectly hedged right now. We have a long system and a short system, but what I wanted to show is on the 5, 10, and 15-year chart. You can see that the market is choppy, choppy, choppy all the way through the first couple of months of the year, and it's really not until technically early part of March, maybe the first week of March, and then across the board on all the 5, 10, and 15-year seasonals does it actually really start to pick up and really start to make a move. So anything we see for the foreseeable 2-week period, it's probably just going to be choppy for the most part, and that's part of the reason that our systems are right now perfectly hedged with a long system and a short system. They're both short-term oriented. I believe that they're 45-minute bar systems that are actually trading, but we'll see how things kind of play out. But when you do get that flow low, if I can find it here, and you see that thing popping up, then that's a really good opportunity to unwind a part of the position and take advantage of that kind of a swing. So I just happen to be putting together some material for a workshop that we're going to be doing here in early March. That's, I think, the first Saturday of March, tentative date, but something that we'll be looking at a number of different types of indicators. The first presentation's going to focus on surge, flow, and doubt. And since I've been working on that particular presentation and getting some of the materials together, I thought I would show it to you. So that's tonight's deep dive. We'll try to go into a little more detail, a few more examples into the future and some other things, but do adhere to what's taking place here with Australian dollar. Take advantage of the different alerts as they pop up, and we'll look at some more later on. Thanks very much.